there's way few silicon startups and there's way few white truffles. Instead, everything is the baloney in the middle, which is random people talking about some random model that's just going to, again, become highly commoditized. You have to remember, all these models are open sourced and none of them mean anything in the absence of the data you give it to train on.
Week about the insane fundraising in the generative AI space. This is stuff like ChatGPT, Stable Diffusion, you've heard these names. And there are now 500 generative AI startups, according to this report. That tracks with what I'm seeing in the early stage. And not counting the OpenAI 10 billion from Microsoft investment, donation, rev share, round trip, whatever that is. They have so far collectively raised more than $11 billion. The article included this chart, which you can see if you're on our YouTube channel, and just tons of folks working in audio, image, and text. So we're basically looking at the multimedia, basically revolution of PCs in the 90s occurring again, and a complete platform shift. Doug Leone from Sequoia, one of the greatest investors in history of Silicon Valley, had this to say, and we will comment on the other side of this 50-second clip from Doug.
I actually think that AI is the next platform shift in the same way that mobile was the one before, internet was the one before. So I think AI is real. But I said earlier, we're going to overestimate it in the short term. We're going to invest in everything in the same way that in 1999 we invested in everything. But then Google came out of that, or Facebook came out of that. So I think you have to have a good head on your shoulder where you don't practice FOMO, where you don't chase every company. AI is real. AI is the next platform. But how do we not invest in everything that walks? How do we make certain investments based on market maps, based on thought processes that are more rational, and not do every investment just because every other venture firm is doing every investment?
All right, Chamath, what do you think of this massive influx?
I think it's important to think about what the incentives are. As Charlie Munger says, show me the incentive and I'll show you the outcome. I posted it into our group chat. Credit Suisse sent all their private banking customers an offer. They are now offering 6.5% for a 3-month T-bill. 6.5%. And if you go back to what we talked about before, when the risk-free rate is somewhere north of 5 or 5.5%, and banks are willing to give you 6.5% in the short term, you have to generate more than 3 times that to make an investment make sense when you're investing in the long term. So if 3-month money is going to pay you 6.5 or 7, if you're going to invest for 10, 15 years, which is what you need to do typically for a startup, you need to get 20 to 25%. So there's going to be a lot of pressure for venture investors to put the money to work, because otherwise their LPs, their limited partners, the people that give them the money, will have this attitude that goes somewhere along the following lines. Okay, I've committed to you. Why aren't you investing? Because otherwise I can get paid 6.5% on the front end. And so this is becoming very problematic. What am I paying you for? What am I paying you 2% a year in management fee for? So I think what happens, unfortunately, is the opposite of what Doug says. I think good investors will try to follow Doug's feedback and advice. And the ones that have a track record of distributions of DPI can do more of it than not. But I think most people will be under pressure to deploy the capital. And so the 500 odd companies, Jason, you mentioned, will get a lot of it and it'll get torched because most of them probably won't amount to much of anything in the short term. You will create way too much correlation and you will have zero time diversity, which, as we've learned, is a recipe for terrible returns.
Time diversity being, hey, you deployed all this Web3 capital, crypto, whatever, in this very short period of time. You overpaid. You
Lit it on fire.
Lit it on fire. Brad, to build on that, Sachs, this is a perfect inefficiency. When you see it from the outside, you're like, well, this is super inefficient. Why so many companies? If you free your mind and just say they're experiments, 2 or 3 person experiments, $500K to $1.5 million in that first stage when I invest, right before you do, when you do your Series A, is at 5 or 10 million. Milestone-based funding is back in the tech industry. And that was something, Chamath, that we lost for a little while there. People would just come out and they would raise a Series B out of the gate. No product market fit, et cetera. Now what we're seeing is people are raising that 12 to 18 months. They got their backs up against the wall. Speaking of tough love, which you referenced, Sachs, that tough love of, hey, you have to hit the next milestone. What did you accomplish with the 1.5 million in order to get the 10 million, in order to get the 30 million? That 500 is going to go 10x. There'll be 5,000 of these startups, but it'll quickly whittle down, wouldn't it, Chamath, as people go through this milestone-based funding system in Silicon Valley?
We haven't given enough time for a logical framework of investing to develop, which also is tied to a logical framework for entrepreneurship to emerge. We're just way, way, way too early. So the thing with all of these language models is that they are grist for the mill. And we talked about this before. If it was a highly proprietary asset, you would have never sold 49% of it to Microsoft for $10 billion because you would assume that it was worth $1 trillion. So it's a huge tell on the part of OpenAI, their deep understanding, and they understand it better than anybody else, that it's a bit of a capped upside. So what is uncapped, I guess, is maybe the better question. Well, if you look at the 1849 gold rush as an example, the people panning for gold, in my opinion, are the people building language models today. They're going to come and they're going to go. But who's going to win? Well, the pick and shovel providers won. Levi Strauss won. So what is the equivalent of that today? I think it's at the silicon layer, because you need to really re-architect how compute will actually work in a world of all of these models. Those folks will get paid. If you look at AMD and NVIDIA, they've been getting paid for years. They continue to get paid. They probably will continue to get paid even more. And so folks that actually take a step into doing something hard and difficult in AI, like custom silicon, could get rewarded. And then there's what I call the white truffles. What are these unique Alba white truffles? These singular sources of data that, when used in reinforcement learning, make your output just zing. And that's where I think Facebook is an obvious white truffle. Quora is a white truffle, but there are a lot of startups that could become white truffles if they gather enough data. And that's like a pretty reasonable framework. And so in that framework, if you apply it to today, there's way few silicon startups and there's way few white truffles. Instead, it's everything is the baloney in the middle, which is random people talking about some random model that's just going to, again, become highly commoditized. You have to remember, all these models are open sourced and none of them mean anything in the absence of the data you give it to train on.
100%. Brad,